folks, hope you're well. I'm not going to say this is going to be a quick video tonight, because I always say it's going to be a quick video and it ends up being 25 to 30 minutes anyway, so I'll try and be as quick as possible. What I want to look at tonight is an article that I wrote in September 2022. The article is about the Bitcoin 4-year cycle, and the thesis I made in this was that the Bitcoin 4-year cycle was actually part of a larger 4-year cycle, the US presidential 4-year cycle, and it had slotted into that pretty perfectly with having in the right place. It was the detail within this is what I used to suggest a bottom might come in Q4 that year, and in the following year, 2023, we would see a run up certainly through the first half of the year and potentially the whole year, as that US 4-year cycle kind of played out as it has done over the last 100 years, really. So I want to revisit this because it's an interesting cycle. Markets tend to run in cycles, and this one's an interesting cycle. If I show you the schematic that we used at the time, so this was the schematic from Bloomberg of presidential cycles. So the dark blue line there is presidential first terms, which obviously this is because it's Biden's first term. The lighter blue line is decennial presidential terms, so where the years start with zeros, so 2020 would be one of those, so we're in one of those as well. The yellow line is the all presidential cycles over that past 100-year period, and then the red line was at that point in time the current cycle, so working its way down towards those kind of lows. So I just want you to bear in mind the general pattern, and that pattern, as I kind of drew it out in my own schematic at the time, was that roughly year 1 goes up, year 2 goes down, the bottom comes in Q4 of year 2, and then in year 3, certainly through the first half of year 3, we usually see a run up, potentially the entire year 3, bit of a pause at the start of year 4, with the end of year 4 being almost vertical in terms of the markets from a historical context. So you can see that here from these lines. So all of these different variations, we go pretty strongly up from kind of June onwards, if you like, in the year 4. Now, the relevance of this is that we're in year 4 at the minute. Obviously the US elections are this year in November, and I've seen a lot of people with the price action over the last week starting to call tops in markets, and markets are starting to roll over, and we're gonna embark on multi-year bear market from this point. Is it possible? Yes, it's always possible in markets. There's nothing that's for sure when it comes to TA. But this data, looking back over the past kind of 100 years or so, it suggests that's not likely to be the case. That actually it's more likely we see a bottom sometime between May and June this year, and then we see a pretty strong end to the year if it was to follow history. So as you can see in the all presidential cycles and presidential first term cycles, we saw kind of what we're seeing at the moment. So run up, bit of a pause, and then a smaller pullback before that final impulse into the end of the year. And in decennial cycles, in terms of that, this is one of those. It's more like a larger pullback into the kind of May, June kind of time, and then still that run up afterwards. So in the context of where we're at, we're kind of here in this cycle. So where the mouse is on the screen at the moment. So I want to look at the chart just to show you what this actually did. So if I remind you again of that thesis that I had, so Q4 bottom and then run up, and if I show the actual chart that I used on that one, it was here. So this was the chart at the time. So my thesis at the time was we would see that bottom come in Q4 in this area, and then we'd see the run up after that, as it shows in this schematic. So this is the actual drawing from that, or actual chart from that article in 2022, and what we saw was exactly that. So we saw that bottom come in Q4, and then we saw strong move through the first half of the year, retrace, but then finish strongly in that year 3, and obviously the start of year 4 has been strong again, and we're just in that kind of rest pause phase just now as we're starting to work our way down. So again, it ties in with that schematic for kind of May, June type lows, and then potential run-ups toward the end of the year. So I don't think that the top is in yet, I don't think the higher likelihood is that the top is in yet. I think it's possible, but I think the historic data would suggest that what we're seeing now is what we would expect to see at this phase of a 4-year cycle. And if we look back over, all of the cycles, and it doesn't matter if it's Democrat or Republican. I've marked these out here in terms of the red and the blue of the cycles. It's a very similar kind of move across all cycles when you look back historically, and you look back historically. This is the S&P I'm looking at, but it's the same on Nasdaq and the Dow as well. If you look back across it, so it's all very similar in terms of those moves. So, data wise, some of the interesting kind of points that jumped out when I looked at the data. So, the average returns for election years when a Republican candidate was elected is 15.3%, and when a Democrat is elected it's 7.6%. So for whatever reason that is, I make no comment on whether on which one is better and which one's not. I'll only look at the data from a returns perspective. It seems that Republican is better for year 4 returns than Democrat. But across all election years, the average is approximately 11.2%. So again, if we look at where we are just now, so bearing in mind that average is 11.2%, we're kind of ahead of that already, or we have been ahead of it. If we look at the lows to where we are at the moment, we're probably right on it, to be honest. Where are we? The lows. So we're a little below that at the moment. So again, supports the thesis of a down before I move back up to get to the average. If we were to see, I'll zoom in on this a little bit to make it easier to see. So just in terms of thought experiment, so start of the year is here, and we are here. So it's 10.2% at the moment. If it were to be a Democrat, the average would put you kind of 49.50 at the 7%, and for Republican up around the 53.02, so not a particularly huge amount higher than the high was already. But it will depend obviously on the move down and the move back up. So that's just kind of averages we're looking at, just out of interest. Some of the other observations. So I think this is the key one for me, that in 83% of election years, the S&P provided positive performance during those years. So if you've been in position since the start of this year, then you've got an 83% historic probability of returning a positive amount this year. So again, suggests that top's not in, and we're going to see a rolling over of price for the rest of this year. Just in terms of the scenario, so a Democrat to Democrat scenario. So when a Democrat was in office and a new Democrat was elected, I know that's not likely this time, but the total return averaged 11. And if it went Democrat to Republican, which is obviously one of the potential outcomes of this election, then the total return averaged a little bit higher at 12.9%. So just some numbers to keep in mind there. And historically, just looking back at the last few cycles, so 12%, 16, 2008, we know what happened in 2008 to give us that negative 37% return. 2004, 10.9, 2000, minus 9, 1996, 23.1, 1992, 7.7%. So you can see there that the just some historical examples of it. So roughly speaking, there's a greater than 2/3 chance that the bull market will continue, and a less than 1/3 chance that we see a correction that sees a low printed towards the end of 2024. So from a probability perspective, the likelihood is in our favour that we see further upside from where we are at the moment, I think, anyway. And if you look at the Bank of America Securities Report, they expect the S&P to kind of pause through the first half of the year. So we were at the moment, we're kind of seeing that pause just now in terms of that retracement, and then potentially yield those higher returns toward the end of the year. Another kind of interesting one, since 1952, we've averaged 12.5% returns in election years where a sitting president runs for re-election, compared to 6.7 in all election years and -1 in open field election years. So again, if we look at where we're at in terms of the US, the sitting president is running for re-election, so it just adds a little bit more confluence to that potential upside for the year overall. So just a few kind of interesting takeaway stats there to keep in mind. So from an overall markets perspective, this supports kind of where I'm at the moment. If I look at Bitcoin, so this is showing you this all Bitcoin and S&P side by side. So I think where we are with Bitcoin at the moment is in a wave 3 with a fifth to come. That fifth could come towards the end of this year or early next year. Year 1 tends to be positive in an election cycle as well. But I think we're in a 3. So if I look at the chart that I've shown a couple of times when we've been having these conversations, so that's kind of where I think we're at the moment. I think we're in an internal 4 of 3 with a fifth still to come, and a potential larger 4 to come after that, and that larger 4 would tie in with that, tie in structurally with that low into June, early July, before the run up again towards the end of the year and early year 1. So it's just an interesting thing to look back at. When you look back at history, it's never going to repeat exactly, but if you look at when we had this conversation of when I wrote this article, and we were here, and the entire thesis of this article was that what we're going to see is a low in here in this period, and then move on in the S&P and Bitcoin through the entirety of 2023 after that, and you look at what it actually did within this chart. What we see is in both Bitcoin and the S&P, it followed that cycle almost perfectly, and that we got the low in Q4, the run up last year, continued run up this year, and we're just in that kind of pause phase now before that mid-cycle low comes in, or mid-year low comes in this year 4. And the important point again, why I'm discussing this now and raising it against all of those who are calling tops and calling a larger bear market or longer bear market from now, is that in all of these scenarios, whether it be all presidential cycles, first term cycles, or decennial cycles, the second half of this year is hugely positive. So just keep that in mind when you're doing your analysis and your risk management, that if you were to take your money out now from a risk management perspective, you would be betting against history if you did it at this point in time. Entirely your call if you want to do that, but it's just something that jumps into my mind when I see the tweets and the information shared on Twitter that it's time to get out, it's time to be cautious, we're at the top, we're going to see a larger pullback. I think there's potential, obviously, for a larger pullback, and my primary thesis from a Bitcoin perspective is that we'll likely see that larger pullback, but that larger pullback is a precursor to a further move, as we see here in all of the data over the last 100 years or so from a US presidential cycle perspective. And the last thing I want to add to this is I've been quite vocal within our Discord that I don't think we'll see rate reductions this year by the Fed. I know that the market was kind of expecting that, and it's been expecting it for a while. I've been quite firm for 6 months to a year that I didn't think they'd come any earlier than 2025. I've got many reasons for that, but this is another reason that supports that as a thesis, because the markets don't like rate reductions, and if we started to see rate reductions towards the second half of the year, the likelihood is markets would react negatively to that, and we wouldn't see what we've seen in all of these cycles before. I mean, there's political reasons why it's unlikely. Nobody wants to crash markets prior to an election, but I think this is another kind of data point that supports that view that potentially no rate reductions in 2024, and the earliest we'll see those is 2025. And it kind of ties in with my previous video of the potential two top scenario for Bitcoin, where we see this first top come here this year, potentially before June, and then we see this large low, what everybody calling a left translated cycle, in the tops in, and then we see this high posted potentially early 2025, so February, March, April 2025, and that's when we start to see rate cuts at that point, and that's when markets roll over. So I'm not going to say blow off top because I think it's too early to say blow off top at this point across markets. I've seen a lot of narrative around that as well, but I think this does support certainly the potential for if you look at these, a pretty straight up move from a positive perspective when it comes to the end of the year. So up into kind of August, September kind of time, pause, and then finish the year up. Little pause, December, January, and then moving on again into February and April of year one, which would tie in with the cycle. So that's all I want to cover. Pretty quick. Hopefully, as I say, you can check this article out on the website. I shall link it in the description. I just wanted to cover that off from a general interest perspective. As always, thanks for listening. Speak soon. Until next time, stay safe. My tea's it. Gotta go.